Welcome. Today, I want to walk you through the 4 levels of retirement and, more importantly, how you can level up from where you are now to reach greater security, freedom, and confidence in your later years. By the end of this video, you'll understand which stage you're in, what steps you can take to move upward, and why physical precious metals like gold and silver can play a valuable role in your retirement strategy. Retirement is not a binary. You're retired or you aren't. Instead, it's a journey through stages, each with its own challenges, opportunities, and decisions. By thinking in levels, you gain clarity. You can see what's ahead. You can benchmark where you are. You can decide which steps to take now. These levels are not rigid, but they offer a useful map. And one thread that runs through all levels is the need to balance safety, growth, and diversification. For many in the 50 to 70 age bracket, that means shifting more toward capital preservation, income, and assets that can stand resilient through volatility. One of those resilient assets is physical precious metals like gold and silver, historically uncorrelated with stocks and bonds, often acting as a hedge when markets gyrate or currencies weaken. We'll touch on that repeatedly as we go. Let's begin with Level 1. Level 1. Survival Retirement. At Level 1, you are in survival mode. You've left full-time work or shifting toward retirement, but your income is just enough to cover necessities. You're focused on cash flow, paying bills, and maintaining your day-to-day living standard. You may have around 40 or 50,000 in the bank, but you don't know if that's enough in the long run. Key characteristics of Level 1 are: you depend heavily on Social Security, pensions, or modest withdrawals from savings. You have limited flexibility. There's little margin for surprises. You feel anxiety over market downturns or economic shocks. Most of your assets may still be in conservative vehicles or cash. At this stage, your priority is stability and liquidity. High risk is unacceptable. You can't afford to see a big loss in your nest egg. What to watch out for? High inflation eroding purchasing power. Stock market corrections during your withdrawal period. Surprises in health costs. Longevity risk. Living longer than your reserves. If you stay here long, you may feel constrained, but you can still move up. That's the goal. One low-risk step many retirees at this stage consider is placing a portion of their savings into physical gold or silver, held in a tax-advantaged structure like a self-directed IRA. Gold and silver have long been trusted as stores of value and can act as a buffer when paper assets decline. Because they tend to have low correlation with equities or bonds, they help reduce overall portfolio volatility in challenging years. Through Augusta Precious Metals, my favorite company for that matter, many retirees are able to acquire IRS-approved gold or silver within a self-directed IRA. That gives you the tax benefits of a retirement account while adding a solid real asset to your holdings. Note: always consult your tax and financial advisors before making changes. Level 2. Stretching Retirement. Level 2 is about stretching your retirement wealth, making what you have go a bit further, increasing resilience, adding flexibility. You're not flush yet, but you're comfortable. Here are the features. You've built some reserves beyond the bare minimum. You may have a mix of safer growth assets and income vehicles. You're able to absorb minor shocks without derailing your lifestyle. You begin exploring diversification strategies. In this level, you look for ways to squeeze more stability and optionality out of your portfolio. You might tilt more toward income-producing assets, or adjust your asset allocation to favor conservative positions. How to level up from here? 1. Build a margin of safety. Set aside a rainy day buffer, perhaps 3 to 5 years of essential expenses, ideally in safe liquid instruments. 2. Diversify more broadly. Beyond stocks and bonds, consider real assets or alternative holdings that move differently from the market. 3. Control sequence of returns risk. Structure withdrawals and rebalancing in such a way that your portfolio doesn't get decimated early. 4. Once again, consider precious metals. Gold and silver can act as ballast in a diversified portfolio, especially through volatile or inflationary periods. Investing a portion of your portfolio in physical gold or silver can reduce overall portfolio drawdowns in bad years. Because precious metals often behave differently than stocks and bonds, they provide a buffer when equities or fixed income suffer. Many investors see this as a form of insurance against extreme events, currency devaluation, or market collapses. By modestly incorporating gold or silver now, you begin to hedge your downside. This doesn't replace your core investments, but it enhances the stability of your whole portfolio. Level 3. Comfort Retirement. At Level 3, retirement feels comfortable. Your income and assets support your desired lifestyle with some breathing room. You may have discretionary funds for travel, hobbies, gifts, or legacy planning. You're less fearful of occasional market storms. Traits of Level 3. You have multiple income streams, perhaps dividends, rental, annuity, and retirement account draws. You've built a diversified base: stocks, bonds, alternatives. You can absorb moderate market corrections without major lifestyle disruption. You begin thinking about how to preserve capital and pass on assets. Now, your game is refinement, not survival. You ask, how can I protect this comfort? How do I future-proof it? Strategies for Level 3. 1. Further shift toward capital preservation. More safe allocations, less exposure to high volatility. 2. Optimize income streams, perhaps laddered bonds, annuities, or dividend strategies. 3. Continued diversification. Make sure you have real assets that can stand firm under stress. 4. Estate and legacy planning. How to pass on wealth without waste. In this stage, precious metals can play a strategic, stabilizing role. A moderate allocation to gold and silver can help reduce volatility, especially in crisis years, giving you more confidence to ride out downturns. Because these metals often act as safe havens, they help protect the real value of your assets when inflation or debt pressures erode paper money. Augusta Precious Metals offering is especially appealing at this stage. You get physical gold or silver inside a self-directed retirement account with secure storage and administrative support. Many clients appreciate that Augusta handles up to 95% of the paperwork and helps you through the funding, selection, and storage steps, all while allowing you full decision control. Use the link in the description to get more information or buy directly. Level 4. Legacy Retirement. Level 4 is the peak. Retirement with confidence, freedom, and peace of mind. You've built more than enough. You're less concerned about income shortfalls and more focused on legacy, security, and impact. Indicators of Level 4. Your surplus is substantial. You can absorb large shocks without jeopardizing your lifestyle. You're focused on leaving a legacy. Heirs, charities, causes. You have the flexibility to adjust strategies as times change. You're less reactive to market noise. Here, your priorities shift. 1. Preservation of wealth. Your job is avoiding big losses. 2. Tax efficiency and flexibility. Structuring distributions, trusts, estate plans. 3. Legacy structuring. Preparing beneficiaries, charitable giving, generational transfer. 4. Adaptive resilience. Having reserve strategies for extreme scenarios. In Level 4, gold and silver now become cornerstone components of a highly diversified, resilient portfolio. A meaningful allocation to precious metals helps protect against systemic risks, currency crises, hyperinflation, geopolitical shocks, monetary debasement, anything that might weaken paper assets or government promises. With this infrastructure in place, your allocation to gold and silver is not a speculative bet. It is part of a deliberate, rational, conservative defense line for your most precious assets. How to level up, a practical roadmap. Now that we've defined the 4 levels, let's talk about how to move upward, from survival to stretching. from stretching to comfort, and from comfort to legacy. Here's a step-by-step approach tailored to conservative retirees. Step 1. Assess your current level. Be honest with yourself. Are your income and assets just enough to cover expenses? Level 1. Do you have some buffer but feel vulnerable? Level 2. Are you generally comfortable but want to protect more? Level 3. Do you feel confident you'll never run out? Level 4. Write down your biggest risks, your gaps, income, expenses, longevity, and your vulnerabilities. Step 2. Set incremental goals. Don't try to jump 2 levels at once. Use incremental goals. From level 1 to 2. Build 3 to 5 years of essential expenses in a safe bucket. From level 2 to 3. Grow diversified assets that provide income and inflation protection. From level 3 to 4. Ensure enough cushion to transcend worst-case scenarios. Set both numeric dollar goals and behavioral goals. How you'll change withdrawals, allocations, etc. Step 3. Embrace diversification and alternatives. As you move up, reduce concentration in any one asset class, especially equity or bond risk. Introduce alternatives. Real estate, inflation-linked instruments, and yes, precious metals. A well-balanced portfolio might include 5 to 20% in gold or silver, depending on your comfort level. Because precious metals often behave differently from stocks and bonds, they provide ballast and downside protection. Step 4. Use self-directed retirement vehicles. If you have IRAs or retirement accounts, consider self-directed options that permit physical precious metals. Many retirees begin moving a portion of their retirement savings into a physical gold or silver IRA. Through Augusta Precious Metals, the transition is made simpler. Their team helps facilitate rollovers, acts as liaison with custodians, and guides you through each step. Step 5. Adjust withdrawals and sequencing. One of the biggest risks is withdrawing too aggressively early on. Use a bucket strategy. Some funds in cash or safe investments to draw from in down years, while letting growth assets and precious metals ride out the storms. If a down year hits, tap your safer reserves and avoid selling into losses. Precious metals can help cushion losses elsewhere, giving you more flexibility. Step 6. Monitor, rebalance, and reassess. At least annually, review your portfolio. Are your allocations still aligned? Has your risk tolerance changed? Are your precious metal holdings still serving their role? Have fees or storage costs become burdensome? If you notice that your precious metals allocation is drifting too high or too low, rebalance accordingly, always maintaining your comfort level. Step 7. Plan your legacy. By level 4, your focus is on preservation and generational impact. Incorporate precious metals holdings into your estate plan or trust structures. Consider how beneficiaries may take possession or liquidate metals over time. Use the secure depository relationships that Augusta offers, and certify distributions in a way that minimizes taxes or complications. Why gold and silver make sense for conservative retirees. Throughout this coverage of levels, you've seen repeated references to gold and silver. Now let me lay out clearly why many financially conservative retirees include precious metals in their portfolios. 1. Hedge against inflation and currency devaluation. When currencies weaken or inflation rises, paper assets and fixed income can lose purchasing power. Gold and silver, as tangible assets, often preserve or increase in value during those times. 2. Low correlation with traditional markets. Gold and silver frequently move independently of stocks and bonds. That independence helps reduce portfolio volatility and drawdowns in crisis years. 3. Crisis hedge and safe haven. In times of systemic stress, financial collapse, geopolitical conflict, central bank troubles, precious metals often attract flight capital. They act as an insurance policy when markets break. 4. Intrinsic, tangible value. Unlike promises on paper, gold and silver have physical substance. They are not dependent on a company's credit rating or government solvency. 5. Portfolio diversification. Even a modest allocation, 5 to 15%, to metals can improve the overall risk-adjusted return profile of a retirement portfolio. 6th, legacy appeal. Metals can be held, transferred, or even physically delivered to heirs. A form of wealth that can span generations. When you combine those qualities with the tax advantages of holding them in a retirement account, the case for metals becomes even stronger. As mentioned many times in this video, Augusta Precious Metals is my recommendation if you want to invest into gold and silver. Their service is incredibly good, and you can also find a lot of information on their website. Now, if you found this video helpful, I would really appreciate you subscribing to the channel. We will cover even more topics related to securely retiring. I wish you a great day.